Greetings, and we are back to the channel where we talk about everything U.S. markets, U.S. headlines, and we make it fun. We are not gonna bore you to death, so it's gonna be fun. It's gonna be interesting, and everything U.S. markets, U.S. headlines. We're gonna talk about some of the indicators. We're gonna talk about some of the chart patterns. We'll also talk about some of the fundamentals and profits, income, things like that. We're going to get into everything, so the first thing we're going to start with is the headlines. So what's going on? Well, with Palantir, we've got something in the news today with Palantir. Palantir's technology gives the West a critical edge in the Middle East, according to their CEO. And basically they say that the Palantir's Maven is a real-time AI surveillance capability that leverages satellite imagery, okay? And so that's one of them. And then also, yes, these are my notes. This is not a script. All my notes that I take. Also, here's one with Google. For any of you who like Google and the maps. So Google brings more AI to navigation with Ask Maps. It's a feature that lets users ask complex questions, launching a new chatbot feature inside the popular Maps app so that you can have personalized questions. That's what we're going to talk about. And basically, let's go to the Rivian one. Rivian is also in the headlines right now. So Rivian is right now they're at a crucial point because they're going to launch a new model. It's a $58,000 model in the spring. But basically, the mid-sized vehicle is considered to be a make or break moment for Rivian after the company has lost billions. So let's take a look at them. Also, we have got Dick's Sporting Goods right here. Actually, Dick's Sporting Goods issues a weak profit guidance, even though they have the merger with Foot Locker, and it weighs on their bottom line a bit because even though they had a good holiday season, the guidance for the coming year isn't so hot. So there's that to keep in mind as well. Also, looking here at NVDA, NVIDIA-backed startup Syntil Photonics, right here starts testing laser chips with customers. Okay, we'll brief you on that. Also, here's one with where is it? Lucid. Yes, Lucid reveals plans for the robotaxi, positive free cash flow later on this decade. What's that talking about? Well, it reveals plans for the robotaxis, and they plan to grow the vehicle lineup and increase the software and technology offerings. So hopefully they'll get to make a profit later on. That's what they're talking about. Also, we'll brush a little bit up on where is it? On oil. More Russian oil sales to help tame some of the prices. And then we might talk a little bit here about Tesla. The Tesla sales in China climbed in the first 2 months of 2026, while the BYD numbers dropped a little bit. We'll touch on that. So here we go. USA forever. Welcome. Hope you're enjoying the channel. If there is a ticker, if there is a publicly traded US company that you would like me to analyze on the channel, feel free to let me know. And yeah. So here we go. To get more specifically into some of the headlines, for example, again, looking more at Palantir. So Palantir, their technology gives the West a critical edge in the Middle East, according to their CEO. And Palantir's Maven is a real-time AI surveillance capability that leverages satellite imagery. The platform is also used in Venezuela. And 3 Amazon data centers were bombed last week in the Middle East. And Palantir is known for its defense technology, but the commercial business is also booming, apparently. Commercial revenue jumped up 137% in the fourth quarter to $507 billion. The shares are up 12% this month. So that's worth taking a look at as well. So here we go. Let's go again, going here to Trading View. We're going to break it down for you. Again, we just talked about Palantir. So let's take a look here at Palantir, right here. And where is it? Palantir Technologies. This is the 1 minute. This is the 1 minute chart right here. And if we go over here, to the This is the 1 day chart. So I have it on 2 different time frames, so you can kind of see the different patterns in both of them. Omex, hello, how are you? And let's see, Palantir. Here we are. Give me 1 second, it's coming up here. Reload. Palantir, 1 second, I'm loading this. Okay, here we go. And let me change the time on this so it's a little bit easier to see. Bring that down. Okay, here's Palantir on the 1 day, and then also here's Palantir on the 1 minute. Okay, so 2 different charts at 2 different times. And if you're wondering what you just stepped into, this is the channel where we're talking about everything U.S. markets, U.S. headlines. We break down all the tickers, all the companies in the news, and we make it fun. Well, we try to anyway. So here we go. If you can see back behind me, right there, there's the charts. And one thing we'll touch on first is the here we are, the indicators. This right here is what we call the relative strength index, right there. That's the 70 line, okay, right there. And then this down here, that's the 30 line. Now, what does that mean? Well, the 70 line, the 30 line, 70 line is kind of the overbought line, and 30 is the oversold line. And those are just guides, because what do I mean by that? Because they are just guides, because if you look, the relative strength index can go way overbought or way oversold. See this right here, this one that went overbought, it's sitting there at 84 before it ever market corrects and comes down. Same thing can happen when it gets oversold. It can go way below 30 for a while before it market corrects and comes back up. So always use those as a guide, don't take them for face value. Yeah. And let's see, here we go. Let's move over here. Yes, another one I'll just briefly touch on is the moving average convergence divergence. What they call that, the MACD. Just a quick brief, yeah. So here is the MACD line, that little blue line right there. And just to make it super simple right now, that blue line, when it crosses the orange line going down, you're gonna see the downward price chart right there. And then when blue line crosses the signal line going up right there, you can see it going up, the price chart goes up there. Now that's super simplified, and that's well oversimplified basically, but that's the general idea. We'll get into the more specifics of how it works later on, but that's just a brief introduction. So when you see the RSI right here, see the RSI right there, that's sitting at about 55. 55 is super neutral. And what I want you to notice is that, for example, right in here, this area, where is it? Right about in here, 59 down to here, this area. You see that? That's the neutral consolidation continuation area. That's where it doesn't, for example, if it stays like this up there, if it stays like that, that's what we would call the consolidation continuation. You would have it just going up and down, not moving. That would be what we call the invisible ceiling, invisible floor, or you can call it resistance, support, etc. But that's that. And for example, I'll get more into that. I just wanted to introduce it to you first right now. Let's dive into some of the price charts. Well, let me introduce you to the trading volume first, because you see these volume bars right here. Those represent the amounts of trading volume. Yes. Let's see, Brown family. Hello. Yes. Welcome to the channel. Everything U.S. markets, U.S. headlines, and obviously all the indicators and fun stuff in between. We're looking at Palantir right now. Right here you see all the trading bars. You'll notice one thing is, well, you notice many things, but when these trading bars are higher, that means there's more trading. When there's more trading, there's oftentimes, you'll see right there, more price action. You see the price chart, you'll see more trading bars right there, okay? And be aware of that. When there's more price action, there's more trading volume. And then let me show you this. Let's do some price charts. See this right here? You see how we have basically 1, 2 double bottoms, right? It's a double bottom right there, boom, and then it goes up, right? That's what a double bottom chart pattern is supposed to do. Comes down and the sellers cannot keep the momentum and the buyers take over, okay? And that's what you see here, bang, it goes up. And then over here, this is this is the 1-day chart, and let's see. You can kind of see it here. Let me show you this. Here's the head right here. Here's the left shoulder. Here's the right shoulder. Here's the head right here, left shoulder, right shoulder. And then that's the neckline, and then bang, it drops down, okay? So that's what the head and shoulders is supposed to do. And sometimes it's hard to really see those head and shoulders. Sometimes they really jump out, and sometimes the shoulders are sloped or angled. They're not always just straight up head and shoulders like that. They can be different orientations, if you will. But that's the idea. And that's, you can see right there, the chart does go down and then it comes back up because of that double bottom right there. So that's how to read that part of the chart. Here's one, I want to show you this. This is again, this is Palantir on TradingView. Here's a head, you can see that. Here's the shoulder, here's another shoulder. Here's the, you see the head, the shoulder, and the neckline. This is supposed to go down, right? But it doesn't break out and go down, it just kind of stays there. So always be aware that it doesn't have to break out. It can just be the pattern without a breakout, yes. And Brown Family 13U, hello to you too as well. Yeah, if you guys have a ticker that you want me to look at, let me know. Dun, dun, dun. And then let's see here, for example, here's one. This one does have a bit of a breakout. If you look here, here's the reverse head, left shoulder, right shoulder, and then neckline breakout going up. Bum, bum, bum. Right there, neckline breakout going up. And let's see. No, that's enough for now. That's Palantir. I'll get into some more chart patterns on the other tickers, but you get the idea for that. We'll get into again. I want you to see also again with these volume bars. You see how the trade volume goes up in certain places, like right there. That's also because you have more price action on the price chart. Okay, and here right now the volume is at 9.5 million, and the market for Palantir is at 364 billion. And let's go here to the earnings side. Okay, looking at the earnings, as you'll notice, there's a quarterly and an annually right there. Okay, so quarterly and annually, it depends on what your strategy is. If you have a short-term strategy, quarterly might be important. If you have a long-term strategy, of course, annual is going to be more important. But so here, when you see this is the Q4. Let me see if I can get more of the there. Maybe is it okay? Anyway, so right there, you can see the Q4. It's higher. The blue bar is higher. The blue bar is the reported earnings, the actual earnings that came in. The gray bar is just the Wall Street forecast, the expectations. And when the earnings actually beat the forecast, that looks good and strong for the company. So 1, 2, the last 3 quarters there, all stronger than the gray part. The real earnings were stronger, so that looks good overall for the quarter. Annually, you'll see right here, I'll put my mouse cursor over it. 2025, better than expected for annually also, okay? And the same thing with 2024, and the same thing with 2023. 2023 actually equaled expectations. So the last 3 years, it was either equal or beating expectations, okay? So there is that. Now, if we go here to one thing to keep in mind for earnings. Yes, this looks good for earnings. Earnings means you have money coming in, but earnings is not the same thing as profit, and earnings is not the same thing as income. So that's why we also look at profit and income on the statements, because they're different. You can have earnings and not have profit. Let me show you. And this for Palantir, put that on the angle button. I'll tell you what I mean here. For example, right here you see the last 3 years. You have 2023, 2024, and 2025. All in green. That's the total revenue. That's the gross profit. That's the operating income, and then that's the net income. Okay. Now all of those are green, looking good, the same as the earnings, but it doesn't always. It's not always like that. So just bear that in mind. Yeah. So that's Palantir. Some people like to look at the forecast. However, I do not. But if you do, here it is. But take this with a whole bucket of salt because. Lime green guy, I love it. I have no idea why I'm here. Just enjoy this show. This is an educational channel. We talk about everything U.S. markets, U.S. headlines, and we just go into some of the analysis and the fundamentals. So if you have no idea why you're here, that's okay too. Like we try to make it fun and entertaining at the same time, not so serious and boring, you know. So just enjoy the ride if you want. If there's something you want to see, let me know. Yeah, let's go back to it. So that's Palantir. Let's again, there's the 1 minute chart and there's a 1 day chart. Palantir. Now the next one, again, all my notes for the day. Google. Let's talk about Google. Why are we talking about Google? Because Google just talked about their new Ask Maps feature that lets users ask complex questions. Launching a new chatbot feature inside the popular Maps app. You can ask personalized questions with more than 2 billion monthly users. And Google Maps is the world's top navigation app. It's already 20 years old, and Google Maps makes money by selling the ads and promoted placements to businesses. It also charges for its Maps APIs and location data. So that's a little bit about Google Maps and how that works. Now, a little bit more specific information I can give you right here. Yeah. So the Ask Maps starts rolling out Thursday in the US and India on Android and Apple. And it's right here. Google doesn't break out revenue from Maps necessarily, which has historically been one of the search giants' most monetized products. The unit has been trying to increase revenue, including by licensing new sets of maps data for companies, etc., etc. So there's that. Let's take a look here at Google. Okay, so we can break them down again. Okay, there's Google. 1 second as I open that up. It's a little bit slow right now. Let me reload this thing. Here we go. Okay, and Google on the 1 day chart. So there's Google on the 1 day. Let me adjust some of the time settings here so it looks easier to read. Okay. And then over here, let me adjust these time settings so it's easier to read. This is the 1 minute chart. Why do I have 2 charts? One for the minute, one for the day, so that you can see the differences between how the chart patterns jump up with one time frame and how the chart patterns jump up with a different time frame. So you can like compare and stuff. So let's go to the 1 day. Right here, here's Google on the 1 day. And as you can see right here, the RSI right there is sitting at 45. 45, as you remember, is very, very neutral. In fact, that's also what you see up here on the price chart. It's stabilizing right there, as you can see right there. That's reflected. So the relative strength index will kind of correlate with the price chart because this is also based on history, and so is the MACD. To be brief about that. And let me erase that. You'll see, for example, again, I want to point out that the RSI is just a guide, because look at this. This thing, Google goes way, way overbought at 87 right there, super overbought. stays there for a while before market correction comes down, and then it can go overbought for a while there again. So use it as a guide and not just a face value thing. Um, there we go. And here we go. Let's go up here to the price chart. Let me show you a couple chart patterns quickly. Here we are. This is interesting. Yeah. For example, right here again, these head and shoulders charts don't always jump out at you straight. Here's the head, here's the left shoulder, and here's the right shoulder, and there's the neckline. It's kind of a hunched over head and shoulders. It's not straight up, but yes, it's still there. And then it does have a small little breakout right there, head, left shoulder, right shoulder, and a small breakout going down. And then here we are. What I want to show you here is also, for example, right here you can see one bottom, two bottoms, and the double bottom, and it breaks out going up. That's what it's supposed to do. It'll break out going up like that. Yes. And the same thing, if you notice here, you basically have here 1, 2, and a third. So right there, you basically have a triple bottom, 1, 2, 3, a triple bottom, and then it breaks out going up. So you can have a double bottom, you can have a triple bottom. That does happen, just like you can have a double top or a triple top too. They go in reverse also. So keep that in mind. You can zoom in and zoom out on these charts to make the patterns show up for you. Here's one that's interesting. As I zoom in and zoom out, it shows up a little bit more. For example, here you go. Here's the, wait, let me zoom out. You see this head right here, that head, and then over here, and over here. Here's your head, left shoulder, right shoulder, and then there's your neckline right there. So I'll zoom out a little bit, you can see it better. Yeah. So head, left shoulder, right shoulder, neckline. And it does go down a little bit, but not too much. Welcome to everyone who's joining. If you're wondering what you stepped into, this is the educational channel where we talk about everything U.S. markets, U.S. headlines, and then we also break it down on TradingView. This is not a sales channel or a persuasive channel, so don't worry about that. Let's go over here. We're looking at Google on TradingView right now because they just launched a new app feature in Google Maps. Here's also, if you look right here, 1, 2, 3. 1, 2, 3, a triple bottom, and it goes up right there. You can see that. And let's see if we can, let me see if I can get a different, there we go. Well, that's enough. So that's Google right there. We can look more at it later. Let's see, yeah. And then before I jump into the fundamentals, also take note right here. You can see, bang, right here. Here's the increases in the see the increases in the trading volume right there, right there, right there. I just want to show you again that trading volume also increases a lot when you have more price action in the price chart. Okay, so there's that. Yeah, and then go over here. What's the volume right now? 2.48 million, and what's the market cap? 3.7 trillion. Okay, yeah, 3.7 trillion right now for Google. Again, you can get that information right there on TradingView. And if we go down here, to the earnings, earnings. What are we earning today, Google? Well, okay. There's the quarterly and there's the annually right here. You see the blue bar, that's the quarterly earnings, what was actually recorded. The gray bar is what was predicted by Wall Street. So when you see the blue bars higher than the gray bars, that's looking very strong because it means it beat the Wall Street expectations. Yeah, so that's what that is. And so that looks strong. Google, if you click on the annual button, how does it look annually overall? Well, the blue bars are all higher than the gray bars right there. So that means that they received more earnings. They got more earnings than they were expecting to by Wall Street. So that looks very positive also, okay? The earnings are great. Well, what about the revenue, the profit, and the income? Well, right there, looking at the revenue, profit, and income, 2023, 2024, and 2025, right there, it's all in the green, all looking good, okay? And that means, well, not only is the earnings good, but the profit's good, the revenue's good, and the income's good. So those points, those data points look strong. Again, always look at as many data points as possible, and keep going. If you want to, again, I don't look much into this, but there is the forecast, but I don't put much stock into this. But some people enjoy it, not really for me. Now, what's another one we have to talk about? Go back here to the chart, erase some of these. Go here. Another one we're going to talk about is Rivian. Why? Because this is a crucial point for Rivian. Rivian, as you'll know, is an automaker, and you can see here one of the new cars. Rivian, it's a crucial time because they're going to begin with the $58,000 model in the spring. This R2 mid-sized vehicle is considered a make or break moment for Rivian after the company has lost billions and sees waning demand for its current vehicles, which are the SUV, pickup, and the electric delivery van. Rivian's guidance includes pre-tax losses. So for 2026, they're looking at losses between 1.8 billion and 2.1 billion, and capital expenditures between 1.95 billion and 2.05 billion. That compares with the 2.1 billion in losses and the 1.7 billion in capital expenditures last year. So there's a little bit of an update on Rivian, and let's see how they're doing on the charts. Here on Trading View, here we go. Okay, there's that, and there, and here, Rivian. There's that. Okay, now here's a chart for this is the 1 minute time frame. So you'll see different chart patterns exist there. And then this is the 1 day time frame. Different chart patterns might jump out there. So that's why I have it on both. Go here to the 1 minute, and for example, you can easily see here's your head and shoulders right there, and your neckline. But see, this one doesn't break out and go down, it just stays there. So it's a head and shoulders with no breakout. This chart pattern has many head and shoulders. I can see them already. So here's another head and shoulders right here with your neckline, and this one actually does break out. There's some chart patterns for you there. And let me see if I can show you. Oh, here's one. Okay, go back over here to the 1 day. Here's your 1 day chart, and I want to see if I can actually change the timing on this to it. Man, I can't really do that very well. Okay, let's go back here to the 1 minute. I was trying to find a different pattern for you to show up, but it wasn't working. Let's see if I go here. Again, this is on. Okay. Here we're back on the 1 day, and I'll show you this over here. Here is if we spread this out a little bit, we'll be able to see basically right here. You have here's the bottom, and here's the bottom, and it goes up, right? And then if you spread this one out, here's the bottom, and it goes up, right? So here's the bottom, and it goes up. You can see my arrows. Here's the bottom, and it goes up. So there's a double bottom pattern right there, and a double bottom pattern right there, and it goes up. So just to show you those. Now here's a fun one. This actually, Here's a bigger one with a breakout pattern. Right here, bump, 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 head, and then left side, right there. Head, left side, right side. There's the neckline, bang, it breaks out right there. So it's got a nice breakout there. For those of you joining, welcome. This is the channel where we talk about everything U.S. news, headlines, markets, and we analyze it on TradingView. This is not a sales channel, so we're not here to promote or sell you anything, so you can relax, right? Again, here's another one, bang. Here's the head, left shoulder, right shoulder, and there it is. And it does have the breakout pattern, bang. And then, hold on, let me change the time on this, bring this down. So yeah, here's basically, let's see, yeah, well, that's enough for now. Here you get the idea. Again, you see here's a top, here's the top. That's your double top, and then bang, it drops down, right? Let's see. Yeah. For all of you joining, welcome to the channel where we make the U.S. markets fun and educational. I hope you guys are having fun watching this. Now let's go to the fundamentals. We've talked about the patterns a little bit. Here, you'll notice right there, the volume goes up right there. Bang. The volume goes up, like where the volume is the highest, usually you'll see different price actions in the price chart pattern right there, because there's usually more trade volume and there's more price action. That's just kind of how it goes. And let's see, let's talk about how much volume. Volume right now is at 6.96 million, and then market cap is at 19.1 billion. Yeah, so we're looking at Rivian because they're in the news because they're having trouble and they're trying to revamp their company. If you look right here, all right, here's the earnings side. Now looking at the earnings side right here, you have quarterly and you have annually. So depending on your strategy, depending on what you're doing, you might look at quarterly if it's a short-term strategy, but usually it's a long-term strategy you're looking for, right? So quarterly, this all looks negative, but here's the thing. The forecast was more negative than the actual earnings. So overall, that's a positive earnings report. So if you get that, how can a negative be a good thing, right? And let's see. Steve, thanks for the likes. Karina, welcome to everyone who's joining. This is the fun educational channel. Thank you, Karina. Thank you, Steve. Same thing with Q3 here. If you notice, even though it's negative, it's less negative than the forecast. So it's actually a good earnings review. But actually, Q2 was more negative. Let's see, Q2 was more negative than the earnings forecast. That's where it's a bad earnings review. Thank you very much for the likes. Go to annually though. How do you score annually? 2025 annually, if you see right there, the reported was less negative than the estimate. So yes, even annually overall, they beat the earnings expectations. Same thing here at 2024. You'll see that the reported earnings were less negative than they were expected to be, so that's good. Let's see. Thank you very much for the likes. I appreciate that. Yeah, I enjoy that. And same thing here on 2023. For the whole the year, it was less negative than it was expected. So that's how negative can be a good thing. Yeah. So let's go. How did that's the earnings. Now, how did the profits and income, etc. look for Rivian? Well, actually, pretty good. As you can see right behind me, the last 3 years, 2023, 24, and 25, total revenue, gross profit, operating income, pre-tax income, and net income were all green, looking good. So that's the positive thing. So even though it's strange, right? Even though you would think like, oh my God, the earnings are negative, but it's a positive earnings report because it's not as negative as it was expected to be. So gotta have a sense of humor with this stuff. And again, here's the forecast. But again, it's just for entertainment. I don't really put too much stock into that because, yeah, it's just I just don't believe it too much. But if some people like it, if you like it, there it is. Again, back to the charts here. That was Rivian, and this is kind of a defining moment for them because they've had a lot of losses. Another one we're going to talk about is, for example, Dick's Sporting Goods. Why are we talking about Dick's Sporting Goods? Well, basically because they have a Foot Locker merger, and they had a good holiday quarter. They had a good holiday quarter, but they issued a weak profit guidance for the year ahead. So they don't have a very good expectations for 2026, because right here it says the company is expecting 2026 adjusted earnings per share to be weaker, and it's right here. The company expects those efforts, along with expenses associated with the deal, to cost between 500 million and 750 million. I don't know you. Thank you for the likes. Love that name. But yeah, a little bit more in the numbers here. Dick's posted a net income of 128.3 million, a 57% decline from 299 million a year earlier. And Dick's posted adjusted earnings at $3.45 per share. Sales rose to 6.23 billion, up from 389 billion a year when the business didn't include Foot Locker. Okay, so again, that's the sales, but their income actually dropped 57% right there. So that's what I mean. One thing can look good, another thing can look bad. That's why you have to look at all the different pieces of information. The Dick's acquired Foot Locker in a $2.5 billion deal, and the combined entity is now one of the largest distributors of products from key athletic brands like Nike, Adidas, and New Balance. The merger gave Dick's the in with a new type of customer, and it's going to allow them to expand its international presence. The acquisition led to a 60% increase in sales during the fourth quarter. Okay, yeah. So, with a business that's underperformed for years and earns most of its revenue from sprawling storefront, heavily concentrated in the malls, that's Dick's. So let's take a look here at Dick's. Dun, dun, dun. Here is Dick's, and this is, let me put this on the 1 minute so you can see that chart. Let's see. Dun, dun, dun. Hold on. That's not what I wanted to do. Let's just, okay, here's the 1 day. I usually put it on the 1 day and the 1 minute, but this time I'll just leave it on the one day. And if you look right here, for example, okay, again, 1 day chart, the RSI right there is sitting there at 38, which is still pretty neutral. And if you look right here, let me show you what I mean by neutral. Here is basically right here. You see right there in the price chart, the points. How do you say? The top points go to the same tops, and the bottom points go to the same bottoms. That's kind of like an example of the resistance and the support, the invisible ceiling, the invisible floor, that kind of stuff. Or you can call it consolidation, continuation. You can see that down here also in the relative strength index down there. Okay, so be aware of that. And for example, again, I wanted to show you right here. Again, you have these trading volume bars. See right there, those trading volume bars, they're higher where there's more price action there. Okay, now let me give you some of these chart patterns. Okay, here we are. For example, here you have double bottom right here. That's your double bottom. Bang, it goes up. Okay, And then, for example, if you zoom in and zoom out, you'll see different patterns emerge, and that does help to do that. Let's see, for example, right here, this is kind of a hunched over. Again, these things don't look perfect. A hunched over, right shoulder, left shoulder. If you can see that, see those circles, my green crayon. Here's the head, left shoulder, right shoulder, and it's not straight. It's kind of like hunched, but it's still a head and shoulders chart. And you see that right there. There's the neckline, and then the head and shoulders is supposed to go down, which this one does. So it breaks the neckline and goes down. Yes. Hello, Mrs. Dish. Hello, Steve. Welcome, welcome. If you do have a question or if you want me to analyze a ticker, just let me know. The fun channel where we talk about everything U.S. markets, and we're breaking down DICS right now on TradingView, and we're having all kinds of fun, aren't we? Again, the time frame right now is 1 day, and here's another one where you can see. Adjust this. For example, here we go. You can see this one jumps out. Here's your double top. See how they both go up to about the same point? That's your double top, and then bang, it breaks out. And also double tops and double bottoms also have a neckline. That's what we call this right there. See that? That's the neckline for the double top, where they meet, where those 2 points meet in the middle. Yes, it comes down, meets in the middle, bang, that's the neckline, and then it goes up. Yeah. And then, for example, right here. Here's your double bottom, and then right here, bang, it goes up. Double bottom, bang, it goes up. And dun. Also here, you can see, here's the double bottom, and then bang, it shoots up, or it continues to shoot up. So be aware of those chart patterns, and I can get more later on, but I just wanted to show you those for now. We've got more of these tickers to look up. There we go. Now let's go to some of the earnings. Earnings right now, or volume right now for trading volume is at 365,000. Market cap is at 17.3 billion. And if you notice, I'm looking right over here behind me, those numbers on TradingView. What we're talking about this morning. Trey, what's going on? Yes. We're in the middle of analyzing Dick's Sporting Goods because they're in the news. They just they had the recent acquisition of Foot Locker, and they're not doing so good financially, but they're supposed to come back up. But anyway, I'm just doing the analytics for that. So yes, Trey. Yes, thanks, Lucas. Yeah, if you guys have a ticker, let me know. But that's Dick's Sporting Goods. Now let's go into the fundamental side. Earnings. What do we got here? Let's see, Dick's. What are you earning? Okay, if you look back here, there's quarterly, there's annually, and right now quarterly, you can see. Again, the blue bars is what is recorded for earnings, and the gray is what was predicted. So the last 3 quarters beat the expectations, except for quarter 3 of 2025. Now, again, it depends on what strategy you're doing, short-term, long-term. Usually the year is more important, but the quarterly can be important too, depending on what you're looking for. So annually, even though 2025 had a bad quarter or 2 in there, annually, again, it did better than expected. The same thing here with 2024 and 2023. All of those years were better than expected right there, okay? So that's looking good for earnings. Now, what does Dick's Sporting Goods do on the profits and income? Click the annual button. Yeah, this is where it doesn't look that as good, okay? So if you'll notice right here, it's on the annual part. What's oil and natural gas stock looking like? Okay, for example, Trey. For example, if you want a quick one on that one, what I'll do is this. U.S. oil, this is the futures. That's that right there. That's the 1 day on the oil futures right there. But if you have a specific oil company, like you want Chevron, you want Exxon, let me know, because I can do Chevron or Exxon, but just put it in the comments which ticker you want. But this is the futures for oil right now. But let me know what specifically you're asking for. And so here, back here, this is the annual part for DIX. ConocoPhillips, perfect. Coming right up. And I appreciate the question. This is a good time to be asking about oil for sure. If any of you have other tickers you want, feel free to put them in the comments. So 2025, let me finish up DIX first. 2025 actually was red, negative for operating income and pre-tax income and net income for 2025. It was only total revenue and gross profit that were good. However, going into 2024, total revenue, gross profit, operating income, pre-tax income, and net income all the way down were green, all the way down for green. Yes, liquid natural gas is booming right now. Correct. I agree with you. Now, here's the difference. Looking at 2023, 2024, and 2025. 1 year is great, but the year prior to that, 2023, you had also operating income and pre-tax income both red in the negative, and it was only total revenue, gross profit, and net income that were positive. So that's what I mean when I say here's your your earnings. So all the earnings look good for the last 3 years. However, last 3 years, the revenue and the profits and the income don't all look the same way like that. So yeah, having said that, that's DIX. And okay, now you mentioned ConocoPhillips. Let's do that one. Okay, so okay, this is the 1 day chart, and here ConocoPhillips. Here we are. What's it doing today? Well, let me adjust this a little bit here. Okay, bring this over. Okay, here is looking at ConocoPhillips right now. As you'll notice right here, the trade volume is much higher because you have a lot more price action there. Yeah, and then also you'll see that ConocoPhillips the RSI just jumped up, and then finally market corrected and came. See, it was up past 70, and then it finally market corrected, and it's still close to 70, so keep an eye on that. It looks like it's gonna just correct a little bit and probably keep going up. Correct a little bit and keep going up. That's a pattern that often happens right now in these cases, especially with oil and natural gas right now. Let's see, let me show you this. So this is the 1 day, and this is my chance to show you guys my new bull. So I hope you enjoy this, because right now, if you are in oil or natural gas, this is your friend right now. So, and right here, as you can see, it did right here. It did a little correction, and then it just kept on going up. Yes. Let me show you some patterns now. Right now it's sitting at about, what is that, 120? ConocoPhillips is at about 120. And let's go over here. If you want some chart patterns, here's a couple right here. You'll see right here, bang, here's your double bottom. There's your double bottom, and it goes up as it's supposed to with that chart pattern. Here's your double top right there. Bang, double top, and it goes down like it's supposed to, right? And here we go. Let me see if I can give you a more fun pattern. Spread this out. If you zoom out, different patterns will emerge. Are there any stock over the last 3 days either boomed or crashed? Well, I actually don't have the information on that, so I can't give you a good answer. I'm not going to just sit here and tell you a lot of different things, but no, I don't have the information on that. But here, over the last 30 days, boom. Well, okay, let's take this one for example. This here is on, where is it? Last 3rd December, January, February. Let's see. Well, it depends on what's a boom or a bust, because some people might say that oil is booming right now over the last 30 days. But it depends on your time frame also. The last 3 days and what you determine is a boom and what you determine is a bust. But really on this channel, I just kind of give you the headlines and I break those down, and then you do what you want with the information. I don't have the information on all the stocks and what they've done over the last 30 days. So there's my honest answer to you. Oh, here's a good one. You can kind of see this right here. You'll see here's your head right. Hold on, let me get my crayon. Here's my crayon right here. Here's my head. Hopefully 2Q continues. Yes, I hear you, Trey. Here's your right shoulder here, and over here, here's your left shoulder. See the head and the shoulders, and basically you see kind of the neckline and the breakout right there. Let me give you some better ones. That's also why sometimes instead of doing 1 day, you can do 1 minute to see the different patterns that emerge and then compare them. Here, let me spread this apart. You can kind of see as I spread this apart, this pattern kind of emerges right here. Here's your head, and then here's your shoulder, and there's your neckline right there. And then zoom out, and you can see how it looks different when you zoom out. Yeah, head, shoulder, neckline. Zoom in and zoom out, and you'll get a different view of the chart patterns there. Let me see about this one. Zoom in, zoom out. And some of these don't really break out, they don't look that much fun. Let me give you a different one, if I can. But, that's enough. So there's ConocoPhillips, some of the chart patterns. I hope that was interesting for you. And again, look at that upward chart pattern, and look at all the trading that's going on. And again, keep aware of the RSI because it's still up there at 70. But again, I think it's, can you for example, well, this is, as you can see behind me, this is basically it. Yeah. I'm not sure what exactly you're looking for, but for volume right now, it's at 1.7 million, and market cap is at 147 billion. Dun, dun, dun. And if you're looking for the earnings, here's your earnings, okay? Right here, dun, dun, dun. Again, you have quarterly, you have annually, whatever your strategy is. For example, if you're looking at ConocoPhillips for the Q4 of 2025, actually they reported just missed their expectations. Q3 actually and Q2 beat the earnings expectations. Now, as the year, as expected, actually I was expecting that to be different. I thought 2025 as a whole was going to beat it, but no. Okay, so look right here. As a whole year, the reported earnings for ConocoPhillips for 2025 actually just missed expectations. 2024 barely beat expectations. 2023 also beat expectations, but I'm surprised there. 2025 missed the earnings expectations from Wall Street, so that's interesting. If you're just jumping in here, this is ConocoPhillips, and we're analyzing it on TradingView. Let's see. Hill Corp, I can look that up. Okay. Give me just a minute, and I'll get to that one. Statements wise, here, ConocoPhillips annually. This is why you look at everything, because even though the earnings look much better for ConocoPhillips, the revenue, the profits, and the income don't look nearly as good. See all the red behind me? In 2025, in fact, the only thing that was good in 2025 was the total revenue. The profit, the operating income, and the net income were all red, negative. And then if you look at 2023 and 2024, they were red all the way down, okay? So bear that in mind. Now let's see, corp, the chart. Let me clean this up. Okay, what's the, you said Hill Top or Hill Corp? Because what's the ticker for Hill Corp? Am I getting it wrong? Trey, let me know. Because I see Hilltop Holdings, but I don't see Hill Corp. What's the ticker? Okay, what's the ticker for that? I put in Hill Corp and it's not coming up. Or am I doing something wrong? Am I making a mistake here? Hill Corp. Yeah, thanks, Trey. Dun, dun, dun. Sometimes they have tricky tickers that are hard to find. But yeah, if you're watching and you're wondering what's to come, we're going to talk about NVIDIA a little bit as well, because NVIDIA just backed a new startup called Sintel with their photonics. They're working with laser chips, and this the Sintel company uses pulsed light, not electrical signals, and it could ease the task of linking chips together. Oh, so there's just one L. Okay, maybe that was my mistake. Okay, wait, no, it still doesn't come up. What am I? HILCORP. Is it a publicly traded U.S. company? Maybe that's the problem. If it's not a publicly traded U.S. company, then I don't really do it on here. Yeah, so maybe that's it. Yeah. Well, let me know later if you can find it. Let me go to the headlines about NVIDIA, and then if you can get me the ticker for it, let me know, because yeah. So here, NVIDIA-backed startup Sintel Photonics starts testing laser chips with customers. So for example, here we go, yeah. Sintel is one of a number of startups working on how to move information around inside AI, such as those made by NVIDIA and AMD using pulses of light rather than electrical signals, a move that could ease the task of linking many chips together to form one large computer. Analysts expect NVIDIA to reveal more about this plans for the technology in times to come. But here, this is, for example, if you look it up on Google, Sintel Photonics is a French fabless semiconductor company backed by NVIDIA. It develops high-speed integrated photonic circuits for AI data centers and high-performance computing. They are known for manufacturing the world's first single-chip, dense, multi-wave laser source that combines active laser components with silicon waveguides, enabling superior speed and lower latency for GPU interconnects. Wow, that's interesting. So there's a little bit about Sintel, and now NVIDIA is backing them, okay? So let's go over here back to NVIDIA, and let's take a look at what NVIDIA is doing. Hold on 1 second. Oh yeah. So by the way, Trey, it says right here. I just looked it up. Hillcorp Energy Company is a privately held independent oil and natural gas exploration based in Houston, Texas. It's a private company, so it's not publicly traded. That's why I couldn't find it. But I do appreciate your interest anyway, especially in that sector right now. It's a very interesting sector to be in. But yeah, that's why I couldn't find it, Trey. Sorry, I couldn't help you with that. But yeah, it's still a private company. Boom. So let's take a look here at NVIDIA, because they're investing in Sintel Photonics. And hold on, bring this down here. And yeah, NVIDIA. This is the 1-day chart. Dun, dun, dun. Okay, here we are. And right now, if you look here, let me put my arrow here. Right now, NVIDIA RSI is super neutral, right there, sitting there at 48, and then rectangle, dun, dun, dun. Look at that. This is a very good example of consolidation or continuation and you'll see it right here in the chart pattern as well. You have the ceiling going up to the same points, the floor going down the same points. This is a good example of what they call the resistance and the support, or you have the invisible ceiling, the invisible floor. It's called consolidation, continuation, etc. But yeah, that's that. So that's one chart pattern. All it means is it goes up and down the same amount and doesn't really do anything. And that's why down here in the RSI, you know, that happens. You see in that neutral area between around 40 to 60 in that area. Now let me show you this. Also, for example, when you start looking there, in the consolidation area, there's not too much change in the trading volume. See the trading volume here? There's a couple of ups right there, but mainly it's pretty much the same. And then over here, for example, if you go over here, where there's more price action right here, again, this is where more price action, you have more trading volume. Yes. Let's see. Yes. Brandy, hello. Thanks for the share. Michael, hello as well. And let me show you. Okay, that's about the trading volume. Let me show you a couple quick chart patterns here. You have right here. Sometimes the chart patterns don't break out, but you still have them. Here's the head, here's the left, here's the right, and then here's your neckline. But again, if you see that, it doesn't really break out. Head, left shoulder, right shoulder doesn't break out, but it's still a chart pattern. Just know that they don't always do what they might supposed to do. Here we go, over here. And then as you see right here, here's your chart pattern for, here's your double bottom right here. Double bottom and it goes up, right? Same thing you see, sometimes the double bottoms and the double tops they go together. For example, what do I mean by that? If you look right here, here you have the double top and you have the double bottom back to back. Meaning, you know, one chart pattern makes it go up, the other chart pattern makes it go down, and sometimes that's how they actually equalize each other. So be aware of that, and then also go over here. Here's a good example of you have the double top right here, double top, and it does go down. But it doesn't go down very much at all, okay? And let's see, that's NVDA. Again, let me go over here. Okay, that's enough chart patterns with NVDA. Let me take, again, I want you to be aware of, look at this RSI right here, and then right here. It's super overbought, and it can stay that way for many days before it ever actually market corrects, yes. Hello Lucas, greetings and welcome again. So just be aware that these indicators are just guides. Now what about the volume? What's the volume doing right now? As you can see, there's not much happening with the price action. So the volume is 49 million. Again, I'm looking, if you look right behind me right there on TradingView, that's where the information is about the volume. And then also the market cap is at 4.4 trillion. This is NVIDIA. Looking here, yeah. Now we go to the earnings side. This is the fundamentals. So, hello Spark, how are you? Thanks for the hello. Quarterly side, here we are. Welcome to the channel. We're talking about everything U.S. markets and U.S. headlines, and we keep it fun. Right there, Q4. Q3 and Q2, all quarters higher than the earnings, the actual reported earnings were higher than the expectations, so that's a good sign of a strong company. Annually, same thing, 2025, 2024, and 2023. Okay, again, all of these actual earnings reports were higher than the expectations from Wall Street. So what does that really mean? It means that whatever Wall Street put out, the company beat, so the company actually looks stronger than what was it supposed to be. So that can affect the stock price, that can affect the investments, stuff like that. So that's how it can be interpreted. But also there are times when there is an earnings beat and it doesn't affect it, or sometimes there was some other problems. So even if you beat the earnings, sometimes the stock price of the investments still go down. So you have to look at all the different pieces of data, because just because one piece of data is good doesn't mean that's the whole story. So there's that on NVIDIA. Go over here to the statements, click the annual button right there, and you'll see that here in this case, all the behind me for 2023, 2024, and 2025, all the revenue, gross profit, operating income, pre-tax income, and net income were all green, all good. So in this case, for NVIDIA, yes, revenue, income, and then also earnings were all good. And so for those pieces of information, that tells you that this is a strong company. It's earning, it's making profit, and it's having income, so that's good. Again, I don't look at this much, but if you want to, here is the forecast. There's the forecast, but I don't put too much stock into it. And go back here, that's NVIDIA. Now we're taking a look at Lucid. Why are we looking at Lucid? Because Lucid, where is my Lucid? Where is it? Oh yeah, here. Lucid is the EV maker that reveals plans for the robotaxi and positive free cash flow late this decade. It plans to grow the vehicle lineup and increase software and technology. So their vehicle lineup, they want to increase that, and they want to increase software and technology offerings, and they aim to get positive cash flow through the mid-sized vehicles and robo-taxis, and expand to Europe and Saudi. Lucid shares are down actually 7.9%. The cash flow target is very challenging because there's less demand for EVs now, and they lost 2.7 billion on the revenue in 2025, and they have negative free cash flow. The negative free cash flow was 31% larger than a year earlier. So be aware of that. That's just in the headlines here. And for that, let's take a look at Lucid. Okay. Again, I highly recommend you look at different time frames on your charts. This is the 1 day, but you can also look at the 1 minute to see how the chart patterns change, and how they actually, does one actually come out to be what you wanted it to be or expected it to be. But here, let's go here. Lucid. Okay. Here we go. Here's your Lucid. And what to notice here? Right now your RSI is sitting here at about 45. Again, your RSI at 45 right there is super neutral. Remember, between 40, 45, and 55 and 60, that's pretty neutral. You're mine, I'm yours. I love the name, welcome. And one thing to keep in mind here, I want to show you this, is right here, looking at the price chart, this is pretty neutral. And the same thing here in the RSI, that's pretty neutral, and it reflects on the price chart there, okay? And also, again, I remind you that these things can go way overbought or way oversold. There's the right here. How do I put this? Yeah, right there. Overbought and oversold. And see, it's hard to kind of point when it's behind you. So there's super overbought and super oversold right there, and it can stay that way for a while before it market corrects. So it's a guide. Also, looking at the volume, the trade volume bars, I want you to see that, for example, here, this trade volume bar, it's very high, lots of trading, because there was lots of price action. Also, here there's lots of price action and lots of trading here. Price action, lots of trading, right? And then, for example, over here, here's some nice patterns that jump out. Lucid Group, this chart has a lot of head and shoulders on it. Here's your head, here's your left shoulder, right shoulder, bang. and this does what it's supposed to. You see the head, left shoulder, right shoulder, and then the neckline breakout. Yes. And here's another one. It doesn't break out much, but you still have. Here's the head. Here's the left shoulder. Here's the right shoulder. Head, left shoulder, right shoulder, and you have the neckline breakout right there. Yes. A lot of head and shoulders on this chart pattern. Here, you actually have a double top bang right here. So double top and it goes down. Let me change this. You can see it better. Right there. See the double top, and they both come up to the same point, and then bang, it drops. There's your chart pattern. Also, again, double tops, and here's your double bottom, and it goes up. If you can see that, yeah. Welcome to everyone joining. This is the channel where we talk about everything U.S. markets, U.S. headlines. We do everything from the headlines to the trading view, charts, indicators, and fundamentals, and we try to make it fun because learning doesn't have to be boring, or we try not to. And we talk about the different indicators, and let's see. For example, right now, let me bring this up a little bit right here. Okay, here we go. Right now, as you can see, there's not much price action, so there's not a whole lot of volume, just a normal volume. So the volume right now is at 1.4 million, and the market cap is at 3.2 billion. If you're wondering what I'm looking at, it's this right behind me, right there on TradingView. That's where that information comes from. And let's see, let's go to the earnings report. What is this thing earning? Dun, dun, dun. And again, based on your strategy, you have the quarter earnings and you have the annual earnings, okay? So welcome if you're just joining. Right here on the quarterly, you can see the blue bar is what was actually received in earnings, and the gray bar was what was expected. Now, unfortunately for Lucid, the received earnings were more negative than what was expected. So you see how the blue is in the negative. It's actually more negative than it was supposed to be. And that's not a good earnings report. And that's also why they're in the news, because they're trying to turn that around. But annually, change that to annual, and you'll see that right there again for 2025, the reported earnings were still more negative than expected, and the same thing with 2024, more negative than expected. Same thing with 2020. Oh wait. Oh, okay. 2023. I'm sorry. 2023 actually had a positive earnings report because it was less negative than expected. So yeah, bear that in mind. Yeah, and so, let's see how the statements compare to the earnings. So right here, click on the annual button, and we're looking at revenue, gross profit, operating income, and net income. So 2025, what we got here? Total revenue was good. However, the gross profit operating income was not. So even though the pre-tax income was good and the net income was good, the gross profit operating income were red. They were in the negative. Now, however, this is how a year can change. So that's 2025. Looking at 2024, it's green all the way down. Your revenue, your profit, income, it's all green. Now, again, change the year to 2023. All the way down, it's red. Oh my God. So again, the big differences between 2023 and 2024 and 2025. So that's your, there's big differences here on the earnings or on the revenue and the profits and income. But that's why you have to look at not just the earnings report, but also the profit and revenues, okay? And so that's Lucid. Another one that we're gonna take a look at is, for example, someone asked me about oil. I think we should take a look at oil. We looked at ConocoPhillips earlier. Let's take a look at Exxon too, because oil is in the news big time right now for obvious reasons. So let's look. Exxon is one of the bigger companies. How's it going with Exxon? And let's see. And let's see. Done. Here we go. Okay, here we go. You'll see. This is actually ever since August 25th. This chart has been going up pretty good like that. Again, allow me to use my my new toy. If you like my golden bull, let me know. Because right now for Exxon, it's quite this is the bull right now. I gotta have my toys. Gotta have some fun with this, right? So there's that. Now, looking at the RSI, you'll see RSI right here way overbought because that follows the chart pattern, and then it finally market corrects, comes down, and it's sitting right here at about 61. 61, dun dun dun. Here we go. And you'll see, let's see, right now, look at the RSI, it's consolidating right here. Same thing right here, kind of consolidating right there, right? And as we look, yeah, let me show you some patterns right here. Some of these patterns don't actually break out too much. Let me show you this. Here's your double top, and right now I want you to notice that Exxon is sitting here at about 154, and yeah, it doesn't. If you look at the RSI, it looks like it could easily just market correct and keep on going because the RSI has already dropped, but the price chart is still up high. So bear that in mind. And then over here, if we go over here, oh, here's one that jumps out. This one doesn't actually. Here's your head. Here's your head. Left shoulder. This one doesn't break out much, but it does have the chart pattern. Here's your head, left shoulder, right shoulder, and then right here, that's your neckline. Okay, and then right here, here's your double bottom, and bang, it goes up. Okay. And let's see, right here, here's your double bottom again, and you can see right here, it double bottom, bang, it goes up right there. Okay, and also here's another chart pattern for you. Here's your double bottom and the breakout going up. This is, if you're wondering where the breakout is on the double bottom, it's right here where they meet in the middle. See my green crayon? Where this comes up and then it comes right back down, it almost forms a W, right? So where the W in the middle part is, that's the neckline, and that's the breakout point, okay? So that's how you find a neckline on a double bottom, and then that's how you find the neckline on the head and shoulders. Now, that's enough chart patterns on Exxon. That should help you quite a bit as far as if you're looking for chart patterns. Now, again, just be aware, like for example, let me show you the trading bars again, where there's more price action, you see the trade volume goes up, right? So Exxon right here, volume is at 4.9 million, market cap for Exxon is at 643 billion, and then scrolling, if you're wondering what I'm looking at, it's that information right there, that's where it is. And then here's your earnings report, quarterly and annually, right there. So Q4, again, if you have a short-term strategy, the quarters are helpful, but most of the time it's going to be more long-term, so the annual is more helpful. But there, again, the blue boxes is what was reported, and the gray is what was estimated by Wall Street. So here, all the last 3 quarters, Q4, Q3, Q2, all beat expectations. Same thing annually, 2025. Actually, so sorry, 2025 missed the estimate. It was just, the reported earnings were slightly less than the estimate. And 2024 just barely beat it, okay? So 1 year it barely beats it, 2025 it barely misses it. 2023, it does beat it. So you can say 2 out of the last 3 years for Exxon beat their annual earnings expectations. So again, this is just earnings. It's just telling you that this part of the puzzle, this piece of information is strong for the company. But what about the profit? What about the income? Let's go here, click the annual button, and you'll see profit and income is much different. Yes, that's why you look at all these different things. So whatever is important for your strategy, whether it's the earnings or the profits or income or all of it, that's why you take a look at all of it, because here it does not look good. It's all in the red for Exxon. Actually, the last 3 years, all in the red, 2023, 2024, and 2025, all in the red, except for 2024's total revenue. Otherwise, it's terrible. Again, let me show you this. Again, last 3 years for earnings, yeah, beating the expectations, looking good, right? And then you go here. So that's why I say earnings and revenue and profits are all very, very different. That's why you look at all that stuff, okay? Now, going back here to the charts, that was Exxon. Over here, okay, and erase these things, yeah. Okay, hello everyone, to all of you who gave a like, gave a follow, gave a share, or for all of you who just watched this and saw something interesting. Maria, I see your hello to you too. Hope the channel was interesting for you. If you do want a ticker to be analyzed or something, let me know. I'm sorry if I didn't see your comment right away, but I'll be here at the same time on Monday. So have a good weekend, and I hope you learned something. If you did, let me know, and see you next time.